Yes, people, right now we're on The Guardian. So Asda is looking to raise £568 million pounds in store sell offs as sales continue to fall. Now, Asda was owned by Walmart, and recently, in the last few years, it was taken over by the Issa brothers. So they are British Indian guys who basically bought out Asda alongside various other elements. They raised debt and they were able to purchase the Asda brand. Unfortunately, they haven't been running it too well, or they've been coming into problems. And now Asda is looking to basically sell off some of its stores. So Asda was one of the top five, supermarkets in the United Kingdom, and it's one of the well-known ones. So it's looking to sell off about 24 stores and a distribution center, but then it'll be leasing them back to raise £568 million pounds. Basically, some have stated that this is a sign of weakness, but sales are falling, and the actual company itself is in a lot of debt in terms of the amount of money that was taken out as debt to be able to complete the deal when they acquisitioned the Asda brand. Now, the Issa brothers, they were famous for the EG group. So they had started off a couple of decades ago with a garage forecourt, so like what we call a petrol station in the UK and a gas station in the USA. They started off with one and then they built many, and they were able to expand that and really build that company up. And then fast forward, in the last few years, they were able to purchase Asda. Now, the Leeds based supermarket group, which is expected to release its quarterly results next week, has continued to lose market share to rivals as sales have gone backwards despite an effort to win over shoppers with price cuts and improved stores. Now, there are some other stores in the UK, other major brands that have been doing really well. So Asda is facing, tough competition, steep competition, because it is a price war essentially. And what these retailers don't want is a price war to the bottom. Obviously, they want to still make profit. Well, it says here sales fell 3.9% in the 3 months to the 2nd of November, according to data from World Panel by Numerator, formerly Kantar, which indicated a 1 percentage point drop in market share from a year before. Obviously, it's not looking good there. Asda's parent group slumped to a near £600 million loss last year. Sales fell and the cost of servicing its debt pile increased. Now, when you take out money, essentially a loan, debt, guess what? You have to pay interest. There's a deal that you do in order to get the money. And this kind of deal is not, it's not £100, £1,000, 10,000, 100,000. We're talking millions and millions and millions of pounds. Um, and you can imagine the interest repayments on that. So just to service those, you know, will take up a lot of effort and a lot of resources and cost a lot. Nadine Horton, a national officer for the GMB union, which represents thousands of retail workers, said there were concerns about Asda's future in the light of the latest lease back deal. So Asda's owners, TRA Capital, is selling off yet more assets to settle the debt liabilities heaped on the business by its own borrowing. So you can see, folks, sometimes if you use borrowing correctly in the right manner, it can be useful. Now, there are entities out there that provide like interest-free loans, and there are other entities that do various other deals. Now, for corporate entities to take on a lot of debt, there's also high risk, and you can see here how that can turn into a very problematic situation. Debt is up, lease liabilities are up, interest payments are up, but market share and staff morale are rock bottom. Asda was basically once upon a time, one of the top retailers in the UK markets. But obviously, right now, it's on the ropes, it's in the ring, and it's struggling. Clive Black, a retail analyst at Shaw Capital, said, "From the outside, it looks like a sign of weakness. Tangible fixed assets are being sold at this time." He said the deal might help Asda to pay off debt or allow more capital to invest in the business, but would also mean higher rents, meaning less cash for day to day operations. If trading was hunky dory, that can be accommodated in the big scheme of things, but that's not the case. Of course, we've seen the drop in sales, which now is leading to big problems for the Asda brand. We have expected a more stable trading position from Asda by now, Black said. Recent market share data has been very poor for grocery. It all feels rather tight. So Asda obviously is in a lot of trouble here in terms of the retail space. Patrick O'Brien, an analyst at Global Data, has said Asda's promise in March under its new chair, Alan Layton, to stir up the market with the barrage of price cuts did not appear to have hit home. There's a feeling that Asda were really going to bring out big guns and basically do some great deals and offers, but that hasn't particularly materialized right now in terms of the situation on the supermarket shelves. Now, competitor entities are doing really well, and obviously that's causing Asda to be under a lot more pressure. So Asda has 579 supermarkets, 517 express convenience stores, and 29 Asda Living general merchandise and fashion outlets in total. So basically, if they want to continue to operate from the latest batch of stores to be sold off, they have gone to two buyers, basically DTZ Investors and Blue Owl Capital, who have taken over. The deal is part of a plan to cut hefty debts at Asda since highly leveraged £6.8 billion takeover back in 2020 by the billionaire Issa brothers and the private equity firm TDR Capital. Now, I did mention the Issa brothers before. They are two individuals who are billionaires and they've been in charge of Asda the last 5 years. Unfortunately, there was some sort of issue between the two brothers as well, and that resulted in a few things happening in terms of the management of the company. And generally, they had a new figure take the lead, but still they are struggling. TDR now controls the group after buying out one of the brothers. So I was saying there were some issues with the brothers. One brother sold his share, looks like, while Mohsen retains a 22% stake after Zubair sold his share. Amarveer Singh, a credit analyst at Credit Sites, said the deal would be considered a negative development for Asda's creditors, as it would increase leasehold exposure, while the proceeds of the sale and leaseback would not be used for investment, cutting the group's main debts. Bonds fell as it emerged that the money is to be used to pay off debt to Walmart, the US retailer that previously owned Asda and retains a 10% stake, as first reported by the Financial Times. I wasn't aware that Walmart was still actually a shareholder here. So it looks like they've got a 10% stake in Asda. Asda previously sold most of its warehouse for 1.7 billion in 2021 and 25 supermarkets for 650 million 2 years later. In similar deals in which they agreed to lease back the properties, they also signed a more unusual ground rent deal for £300 million in 2023. So an Asda representative has said Asda's property strategy is centered on maintaining a strong freehold base while also taking a considered and selective approach to unlocking value from the real estate where appropriate. These transactions reflect that the approach enabling us to realize value from the sites while retaining full operational control. The article was amended on the 21st of November. In the earlier version, indirect quote misrepresented Amarveer Singh's view of the deal, which is that it would be considered a negative development for Asda's creditors, not that it would be negatively affect Asda's credit rating. Okay, there you have it, folks. So Asda looking to sell off some of its stores and then lease them back. But generally speaking, they are in somewhat of a pickle at the moment, looking to raise £568 million to help pay some of its debt. So have you shopped at Asda before? What do you think about this issue, this debt deal now that Asda are doing? What do you think about the general UK economy and the wider economy around the globe? Drop a comment in the comment section below. Currently around 3.7k subscribers. Help us reach 10k subscribers by clicking the subscribe button. Okay, people, catch you in the next one.